DIA QQQ here with the Traders Club. Welcome to the market update. Today's January 3rd, 2020, Friday. As I record this video, market should be open for another 5 hours. So market has been open for like about an hour and a half. So I am recording this intraday in the morning time. And so you should be seeing some flashing lights on your left. Hope you guys had a good New Year's Eve and New Year's Day holiday. Hopefully you guys are all rejuvenated to start the new year with a good mindset and maybe hopefully great expectations, right? While probably there's still many people very fearful of where the market is going to be headed in 2020. So we're going to talk about that. But as usual, let's continue with our weekly analysis. Let's start with the spider, diamond, Qs, Russell, Banks, Semi, and let's do transport as well. We've added that I think last week. And so first let's talk about how the market has been thriving last 3 months straight, right? We've only violated 10 EMA. I don't have 10 EMA on this chart, but we've only violated 10 EMA, 10-day moving average on spider once, and that's in early December. That was it. In 3 months time, we only violated the 10-day moving average on S&P one time, which is December. And that's a very strong momentum that tells you this indeed was a breakout, right? This indeed is a breakout. We pull back, retest the level very quickly. We've been talking about this. A lot of people are looking for a steeper pullback, and market isn't gonna give it to them, right? You missed out on these pullbacks to buy the dip. Well, now that you think this is a better environment, now you wanna see a steeper decline for you to get back in, or you want for you to start loading up the calls or the longs. Well, market ain't gonna give it to you. So we saw that very brief 1.5% correction, and that wasn't nearly enough. If you weren't like holding cash or you're bearish, this wasn't enough for anybody to really jump in. I think what this was, if you've been already holding throughout the year 2019, I think this was maybe a good level to maybe initially buy that dip or accumulate more longs for the next leg higher. So now the market is been marching higher. And I think this makes a lot of people very nervous, right? Market can't possibly go higher forever. It's true. Market cannot go higher forever. Market cannot go higher every day. But market can stay irrational more than you can stay solvent. It means market can actually do the unthinkable. It doesn't happen all the time. It does happen sometimes. Let's actually do real quick exercise. Let's go to S&P 500. Just a quick exercise here and kind of go back to here. I'm gonna do this here real quick. You guys all know 1988, right? You guys all know what 1980 or 1987 Black Monday, right? Actually, let's put in 20 MA. Okay? Right? That's a 20 MA right there. That dotted moving average. So, just a quick exercise that market can do the unthinkable. I'm not saying this is what's going to happen this year or next year. I'm just trying to illustrate the point using this analogy, using this exercise, and we can do this together through this video, that unthinkable do happen. So this is 1987 Black Monday crash. That's 1987. We came down to 1994, 1995, right? We saw 2-year consolidation, right? That's a 2-year consolidation. As you can see, 1993 and 1995, right? Is it 2 years? Yes, that's a 2-year consolidation. So from 1987 to like 1995, that's what? That's about what? 80 years of run, about 80 years of bullish run. So if you look at how market crashed in 2009, right? 2009 market bottomed, and it ran to what? 2017. So 2017, right? 2017 from 2009, right? So from 2009, 2017, that's how many years? That's 8 years. So we are kind of dealing with a similar situation. That's in 8 years, right? 87, 1995, that's about 8 years. What most people are saying right now is that there's no way market can keep moving higher. And not to mention that we already saw 2-year consolidation. We saw 2-year consolidation, what? From 2017 or 2018 and 19, right? 2018 and 19 sideways move, similar to here. Again, I'm not saying this is what's going to happen. I'm just illustrating the fact that unthinkable can happen in the market. This is one occurrence that I'm just using as example. So after this kind of move, right, 8 years of bullish run, what do you think a lot of people are saying? There's no way. There's no way market can go higher. And then we started market moving sideways like this for 2 years. What is everybody be saying in last 2018 and 19? Big recession is coming. Big crash is coming. Bear market is coming. Then they keep arguing with all kinds of different things happening, right? And say, there's no way market can go. We broke higher. Not only market went higher, market went faster and faster and faster. You see how this environment, oh, it's a difficult environment. Look at this move. I mean, you know, look at these pullback. This pullback is detrimental. I mean, can you imagine what people were saying down here? Like, oh my God, look at the gigantic double top, man. We just broke below that support. This thing is going down, right? And then move sideways for like a whole entire year, and move another sideways for an entire year, and then move sideways for 6 months. We make a little move sideways for like 2 years. Not an easy environment back in 1980s to 1995. But nonetheless, market did make move in that 8-year period. We did see an uptrend, and then market moved sideways. And after you're going through environment like this, like after this kind of move, what are you expecting? You're expecting worse environment. You're expecting the market to crash. You're expecting there's no way market can even go higher. Not only market even went higher, market actually even went higher faster. And look at the trajectory from here to here. And they actually started going like completely vertical here back in 1997, 1998. And here's why I put in 10 EMA there. This is 10 EMA, right? I'm going to adjust 10 EMA just a little bit. Or, oh, is it 20 EMA? That's 20 EMA. I'm going to adjust just a little bit. Just loosened it a little bit. This was a breakout point after 2 years. That's 2 years of consolidation. Sideways move, right? Today's looks more like, you know, this. Right? That's what looks more like today. Today looks more, this is what it looks like today. This is a 2017 peak, 2018 slight new all-time high, and then end of 2018 that plunge, got back up. Again, this is 2018 and 19, right? And then we had the summer pullbacks, right? In 2019, and then he finally broke out, right? That's what it looks like today. But back in 1993, 1995, that's how he looked, which is similar. And then we broke out. And we broke out, let's do this. We broke out right here. And we had a quick retest too. Very, very similar. How you see how that's a prior resistance, that's a support. Here, I'll do this. Like that. Right? Prior resistance, you support. And that was very, very quick retest. I wonder if that was like 1.5, which is similar to the decline we've had in early December, didn't we? Did we have that was 1.5 decline also? Where is it? I want to check. I'm curious now. So I'm talking about this right here. I'm curious. Let's move that a little bit. 1.9. Not looking at the lower wick there where it closed. 1.9%. So very similar because it broke out, right? We broke out all-time high. Look at that. Prior resistance. Quick 1.9 retest. Let's go back there. All right. So we're here now. So here's 1.5. See, this time I didn't measure that wick either. See, that's a wick, but I didn't measure that wick. So 1.5, quick retest, prior resistance, quick retest. And then let's say we're about here. Let's just say this is today. Let's just say this is today. We're about right there, like that. We're right about here. 514 on S&P 500 index. Well, it can't, there's no way it's gonna go higher every day, right? It's been going up since like what, from December, right? Every day for 3 months, man. Like April now, it's been like going on for 4 months straight. There's no way. Oh my God. April, May, June, it does not stop. We consult and look at what is this? We went all the way to September after breaking out in February, and it won't stop. This is December, and this is February, and that 20 MA continues to hold like some crazy maniac, and a lot of people are saying there's no way it can go higher at this point. Nowhere can go higher. No way it can go higher. No way it can go higher. No way it can continue 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 higher. It just kept going higher. What I'm saying is, I'm not saying that's what's gonna happen. It could. I'm saying it could. I'm saying it has done that before. You know what? Let's you know what, let's change that to blue. How about that? So should we see if this gets respected throughout this year? Right? All I'm saying is it has happened before. It could happen again. It may not. I'm not sure. So the way we have to deal with the market is we want to give benefit of the doubt to the buyers. All you guys who love to recite Dow theory, Dow suggests the trend is assumed to be in effect or valid until it gives us a clear signal that it has been reversed. Do we have any clear signal that it has been reversed? No. Even if it comes down back here, that's not a clear signal that it has been reversed, right? So we want to continue to give benefit of the doubt to the buyers. And that's how we have to treat this market, just the way the market is. There is a chance the market could continue to thrive to the upside, and we're going to continue to see if we can respect that level. Are we going to, it's going to look like 1995? I don't know. Maybe, maybe not. We'll find out. Right? We'll find out. But what I'm saying is, it happened before, and market can do the unthinkable. Where you said there's no way, right? There's no way it can possibly keep going higher like this. It's impossible. Market can do the impossible. People have been saying the same thing since 2013, 14, 15, 16, 17, 18, 19. Haven't you learned anything yet? Are you going to continue to listen to these people who's been calling for crashes for the last 8 years, 7 years? If something isn't working, it's probably best to change strategy, right? Maybe learn from the mistakes. So right now, this gap though, I think here's what I'm going to propose. Like if we don't gap it up right away, early next week, we start fizzling here. There's actually gap here in 316. Here, let's go to hourly. See, there's a gap here, right? There's a gap. You can see there's a gap. So go to daily again. So there's gap here. That is coinciding with that 20, right? So we start fizzling. Here, not gapping up right away. For market to continue to thrive to the upside, maybe my next target is 330. If we start to fizzle, even if it comes up and fill the gap, there's a good chance we're gonna come back down to retest this gap area where the 20-25 EMA is residing. Only way for this market to continue to move higher and continue to march higher and continue this momentum that it's been in since early October, it needs to gap up and make this into the island bottom. That's the only way. If we go up and fill this gap, entirety of it, or fill a little bit and fall back, or we don't even feel that gap, we start to fizzle here and comes back down, it's going to come back down to challenge this gap area, which is coinciding with that 20 MA. So looking at the short term, that's how it's going to be. So if this gap does not get filled or partially gets filled, or even if it gets filled, we're going to come back down to 317, 315, 316 to retest, to challenge this gap. Only way for this market to continue to march higher is gapping up, gapping above it. Maybe come and fill a little bit and then gap up and continue 330. Right? And sometimes things like that do happen. Like I remember, when was this? It like gapped down, it gapped up. When was that? No, it wasn't here. It's like gap down and gapped up. When did I see that? Here. Right here. I see it. I remember because I was trading. Right here. I was trading. Okay, so we gapped up initially, which we did yesterday, right? And then we gapped down today. And then we gapped right back down. You see that? And then this kind of became an island top, right? This was back in January of 2017. So you see how we gapped down and there was gap. There's gap. And then we came down, we came back down, retesting the gap again. What does it do? Boom. We gapped it up. You see that? We gapped it up. So there was actually back-to-back gap. There was island top gap, island bottom gap, right? And then market, what did it do? Continued higher. You see it. There's a lot of mind games here. But this is why you will always want to give benefit of the doubt. When the trend is up, you want to give benefit of doubt. Because do you know, I was trading back in 2017. Do you know how many people were calling for island top here? Calling this as this thing is going to come down, retest at least this 219 area, which was at the time this breakout level. This was Trump rally, remember? The Trump rally? So we're going to at least come back down, at least minimum, come down to 218, or there are people calling that maybe even come down and fill this gap at 210. I remember hearing this. Experts, chart masters, educators, whatever, right? And then I was saying the same thing. For the bulls, we're not going to see something like that. And look at the 20 MA holding there too. For the bulls to march higher, continue with this momentum, what they need to do is gap up, which they did right here. They gapped it up in this gap area, and then they marched higher, right? And the 3 white soldiers even showed up there. So, there's a gap down. We fizzle, and then we gap up. That's the only way to have another bullish run. We don't do that. We feel partial and pull back, we're going to come back down. We feel entirety of this gap, we're still going to come back down. Only way for this market to continue higher would be then gapping it up. But sometimes it might take a couple days to do it. Sometimes it take a couple days and fall back. It doesn't matter. It really doesn't matter. You should not be trading. You should be so focused on this day-to-day movement. Right? For me, it doesn't really matter. It goes higher, great. Comes down, whatever. It really doesn't matter. just the way I trade, the time frame I'm trading, right? But I kind of want to know, right? I kind of want to know because I'm still holding heavy long positions I've been accumulating throughout 2019. So I kind of want to know, because it's been so much fun going through this move. So I kind of want to know if we can get to 330, right? So I'll be excited to see if this thing gaps up. Then I'm like, okay, we're going to go about 330, maybe higher. But if we start to fizzle and not able to gap up, then okay, we're probably going to come back down to 316 or something like that. And if we do, I might be thinking about like, okay, do I want to buy this dip? Do I want to add something? Like I would have to plan, I would have to maybe prepare, how I'm going to engage, how I'm going to deal with that situation. Doesn't mean I'm going to be in panic, like, oh my God, crash is coming. No. Diamond, same situation. Right, we got that. We see that gap down. There's gap down there. Same situation there. Qs. Yep, so gap here. Same situation. Gotta gap it up. Otherwise, there's some gaps here. And 20 MA is in that vicinity. There's a little gap here. There's a gap there. 20 is right there. Let's go to Russell 2000. Yep, similar there. Or kind of near 20 MA there, but there's that gap. Banks. Yeah. So gap right here. And there's that 20 MA there. And there's another gap area right here. Right, that gap right there. So that 20, residing in that vicinity, 30, 29, and there's also gap here. So it might come down, retest the level, and that's going to provide some at least short-term support in that at that time. Semis always kind of gappy anyway. So we kind of got to that level that I given you, that Fibonacci level. We got the first level fib. We'll pull back. Second level fib. We're pulling back here. 20 MA. That vicinity, gap here. Very bullish on the semiconductor here. I want to continue to give benefit of doubt though to the buyers. Transport continues to lag here, pretty much in a consolidation mode. And I have to say, this is a bullish price action. This is a good consolidation before going higher. I don't know if you're going to break out here, straight up, but we may do something like that, or we may do something like that. But I think sooner or later we're going to break out, and when this transport breaks out, it's going to prop up the market even more. Remember, what did keep continuing to prop up the market? When the banks and the small caps are lagging, as they went back up, that's what kept the indices continue propped up. Now transportation average is the most lagging index, which, it's been just pretty much, it hasn't even broken out yet. Everything else broke out. Russell broke out, banks broke out, semis broke out, everything else broke out. Transportation average is only index hasn't broken out yet. So when these guys break out, and that's going to even make the market to even prop up even more. And I think that's why I think there's a good chance that Spider can continue to march higher to 320. Now we may even see slight pullback, maybe retest at 20 MA, and then just goes right back up. Right? So we'll follow up next week and see how he played out, right? And we'll go from there. My December promotion is gonna be ending. You can go to tradersclub.com, click on join there. In 2 days, so January 5th, it's gonna be the last promo that I'm gonna be doing. And there won't be any promo until end of this year, probably not until Thanksgiving of 2020. So this is going to be the last one. It's going to be ending in about 2 days, which is going to be late Sunday evening, which is January 5th. I just pulled this. When did I pull this? Yeah, I pulled this yesterday, but it's data as of 2019. So the entire year of 2019 performance here. I had the best year in 2019. I initially had a best year in 2017. 2017 I did 60% while S&P did 20%. That was my best year because, again, you guys know that 2017 I was able to ride this move all the way up there. 2019, well, when this happened, I was buying this dip pretty heavily and bought this dip, bought that dip, bought that dip, and then I was riding this all the way up. So that's kind of what why I was able to achieve what I've achieved here. So I don't know. I think overall S&P is gonna do another 20 to 25% gain in 2020, and I've been talking about that. I've been calling 400 since the December lows. You guys remember? Since the early part of 2019 that I've been calling 400 on Spider, and that would be, you know, another 24% or something like that from this point on. But again, like I said last week, I won't be mad if we get to 380. I won't be mad at all. But I think we'll do about 20%, maybe more in 2020. Obviously, it's gonna have ups and downs along the way. But so yeah, the membership is going to, the promo is going to end late Sunday night. So this is, you can see this was back in, yeah, 2500, 2050, 250 on Spider when I was calling 4,000 there. Apple's already 300. Apple was already 300. This is my V reversal prediction that I thought the market was going to go straight up to 300. So you can feel free to check it out. Some of my members, brokerage statements there, year to date, 2019. So anyway, yeah, you guys have a wonderful weekend and good luck trading next week.